This video is for Forex beginners who are looking out to start Forex trading with $100 account, or a Forex intermediate who is trading $100 account. I'm going to show you how you can be able to maximize profits and as well minimize losses as a $100 account trader. Now, before we go into that, you have to understand that you don't have any advantage in the market if you're trading $100 account. Why? Because market is likely going to kick you out in a very short period of time, and as well you're going to be making little profit. I can't even buy you a plate of food. And again, if you're trading $100 account, it's likely going to mess up your psychology, in the sense that you might think that your $1 profit or $2 profit is not big enough to stroke your ego as a man, and then you might end up messing up your psychology and then losing all the money for the market and all that. So I'm going to show you how you can be able to maximize profit and minimize losses in this $100 account here in this video. But before we go into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade, and as well show you the mindset behind my strategy. If you want to be seeing content like this, I want you to like, subscribe, and as well drop a comment. I'll be right back. Now, the first thing you need to have in mind is that you need to ask yourself a particular question. How long do I want to stay in this market? How long do I want to be in the Forex market with my $100 account? Now, do I want to lose it once and for all by simply risking the $100 on one particular setup, and then if it goes, it goes? Or do I want to risk it 5 times on 5 setups? That means I want to risk $20 on 5 setups, and if I lose that 5 setup, my $100 goes. Or do I want to risk $10 on 10 setups, and if that 10 setups goes my stop loss, I lose my whole money? So everything's all about plan. You need to plan yourself. You need to be able to identify how you want to lose the money, how you want to make the profit. What's your plan? Different person have different plans. So whatever plan you have, the whole goal is to maximize profits, minimize losses, and tolerate risk. So what makes a good plan? What makes a good plan is the ability for you to maximize profits, minimize losses, and as well tolerate risk. Now I'm going to be showing you how I'm likely going to be trading a $100 account if it's in my own case. So whatever I'm showing in this video is how I'm definitely going to do it. Different person have different way they want to do their own, and you too might have different way you want to do your own. But this is how I want to do my own. Now, the first question I have to ask myself is how long do I want to stay in the market? And I'm going to go for 5 times in the market. So I'm going to look for how I can look for 5 setups and risk $20 on those 5 setups. Now, what it means is that I only have 5 lives in the market. So if I'm going to shoot 5 times, and I'm going to definitely be shooting once I see opportunity. What this means is that I'm not going to be everywhere in the market. I'm not going to be analyzing everything in the market. I'm going to simply sit down back and patiently wait for a high probability setup to come board. So I will shoot, because it's all about shooting. And whenever I shoot once, I'm risking $20 to that shoot I'm going to shoot. So let's assume I see a setup that meets my criteria, there's this and that, everything is completely valid for me to enter a trade. Now I'm going into the market to risk only $20 on that market or on that setup. And what it means is that so long as I've risked $20, I'm left with $80 in my account. So I have four more lives to go on the market. Now, me risking that $20 in the market, I'm likely going for a 1:3 risk to reward. That means if I'm risking that $20 for my shoot, I'm likely going to aim for $60 in the market. So what this means is saying that if I'm risking one of that $20, I'm going to get 3 of $20, which is $60 in the market. Now, let's for instance say I shoot the first one and I hit take profits. I've made $160 in my account, right? That is it, yes. Now, if I shoot the next one and I lose, I'm going to lose only $20. What that means is that out of my 4 life, I've used 2 life and I made $60 profit in the first life, and now I've lost $20 in the second life, which means I have only $140 in my account. Remember, I'm only going for high probability setup, so I might stay days without having seen a trade, because high probability setup come only once or twice in a week, or let me say 3 times in a week. So you're likely going to be seeing a really high probability setup 3 times in a week or 2 times in a week, just depending on what strategy you're using. So remember I stopped. I said I've already used 2 life. One was take profit, the other one was stop loss. Take profit, I had $60. My account became 160. I had a stop loss in the next one. My balance became $140. Now I'm left with what? 3 lives. Now these 3 lives now out of the 5 lives, I'm definitely having 140 in my account. Let's for instance I go for the next one, which is a break-even trade. That means I'm making only $20 from that trade and it hit my break-even. My balance becomes 160. Do you get? So now I have 160 balance in my balance, and as well I have 2 life remaining. I've used 3 lives, remaining 2 lives. Now let's assume these 2 lives now I hit a stop loss. I'm likely going to lose only $20. Now my 160 becomes 140, right? You see? Now let's assume the fourth one now I hit a stop loss. I'm likely going to be having only 120 left in my account. And if I hit a take profit, I'm likely going to be having $200 in my account. So the whole aim is to see how you can be able to maximize your profit and minimize your losses. So if you see, no matter how many losses I have in this my setup, if I hit a one take profit, I have more purchasing power to be in the market. Do you understand? So that's how you can be able to maximize your profits, minimize your loss, and as well tolerate your risk. Now the whole point of this thing is for you to be able to be disciplined enough to take only high probability trades, and as well don't be so excited to take plenty trade, because taking plenty trade is going to make you have plenty losses. And be very, very focused on what you're doing. Be focused that I'm going to take only high probability trades, and that's how you're going to be able to win this market. If you're disciplined enough to make this plan and stick to this plan, you're going to win. But if you're not disciplined enough and your body is switching you to take trades, you're likely going to lose your money. Now, another thing you need to consider for you to be able to achieve this is simply your lot size. How many lot size should I use for me to be able to achieve this? I'm going to show you this on the chart right away. Now, let's analyze this loss that I took here together with you. Now, before you can select a loss that you're going to use on a particular setup, you need to understand how many pip stop loss is that setup. And again, you need to understand how much you're willing to lose. Now, in this scenario, or in this case here now, what I wanted to lose was simply $50. $50. So no matter what market does, I'm going to lose just $50 on this setup, and that's exactly what I lost. Now, for us to select a particular lot size that's going to align with this $50, we simply need to understand how many pips our stop loss is. Now, in this case scenario here, our stop loss here was 51 pips. So let's pay attention to that. Our SL here was 51 pips. Now, for you to select a particular lot size, now you want to select a lot size that is going to resonate with these two things, which is your stop loss and how much you want to lose. You're simply going to go for a lot size that, if price make 50 movement, it is equal to $50. In this case, now the right lot size I used here was simply 0.10 lot size. Now, what this lot size is saying now is that if price make one pip movement, let me lose $1. And if price make 50 pip movement, let me lose $50. And if price make 51 pip movement, let me lose $51. That's why if you look at this, my loss I took here, I had a $51 stop SL. That's what I lost in this trade, $51. So if you're trying to select the lot size, what you want to pay attention to is how many pips is your stop loss. And then select a lot size that if price moves that 50 pip stop loss, you're simply going to lose your $50. So for you to be able to calculate these things, you simply need to understand how many pips a one lot size is going to worth. And if you check my previous videos, I've explained how to calculate these things on how one pip is equal to a particular amount. If you use 0.001, one pip is equivalent to 10 cents. If you use a 0.10, one pip is equal to
$1. If you use one lot size, 1 pip is equals to $10. So you need to be able to understand how to calculate these things for this thing to be easier for you.
I think that will be all for this video. I'm going to make another video where I'm going to show you how to break even in the market. But before we go into that, subscribe to this channel and like and drop a comment for me, because my next video, I'm going to be showing you how you can be able to break even in the forex market. I'll see you on the next video. Peace. Sorry, you'll see me on the next video. Peace.